In this week's episode, we're going to discuss the 4 L's in retirement. Really important words, all 4 of them. We're going to dive deep into what each one of these things means and what it means to you in your retirement. Let's roll.
Welcome to the Safe Money Retirement Show with your host, certified financial fiduciary, Tim Wood. Tim is a retirement and income planning expert, best-selling author of Safe Money Retirement, Your Game Plan for Success, member of the exclusive Ed Slott Master Elite IRA Advisor Group, and founder of SafeMoneyRetirement.com. Tim uses an education-first approach with clients nationwide to ensure they understand their choices in planning their own safe money retirement. Tim focuses on wealth management, retirement income, tax and long-term care planning, and asset protection and growth strategies. And now, from the Safe Money Retirement Studio in Johnson City, Tennessee, your host, Tim Wood.
Hello, this is Tim Wood, your host, welcoming you to the Safe Money Retirement Show. I'm a certified financial fiduciary, asset and retirement protection specialist, and your one-stop source for capital preservation and strategic income planning. Once you get to the point of planning your retirement, or especially if you're already in retirement, you know this to be true, there are 4 L words. And what I mean by that is a word that starts with the letter L. There's 4 words that are crucially important to your retirement plan. We're going to look at each one of them. They are longevity, lifestyle, legacy, and liquidity. And we're going to look at each one of those in depth in this episode and how it relates to your retirement. But first, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, what are you waiting for? We will send you a copy absolutely free with no charge and no obligation so you can start planning your own retirement by knowing what's available out there. Just give us a call. It's toll-free from anywhere in the United States, 1-800-913-SAFE. That's 800-913-7233. Or just log on to our website at safemoneyretirement.com and request your free copy right now. So today we're talking about the 4 L words that are super important in your retirement. So let's dive into this right now because I want to have time to get into each one of them. Let's go ahead and start with what I believe is the most important one. I'm going to go ahead and put what I think is most important out there first, longevity. Longevity risk is one of the main risks that people have to worry about. And I'm going to be honest with you, clients constantly underestimate how long they're going to live. I see it all the time. So making sure you've got a plan to cover your longevity no matter what happens. That literally is the first step that I work with clients. Work on with clients, help them make sure they know they've got a plan for longevity that no matter what happens, if Social Security does get cut by 20 or 30%, they're going to be okay. If inflation does keep going and their expenses go up, they're going to be okay because they've got a plan for that. Basically making sure you've got a plan for pretty much every contingency in your longevity and making sure you don't run out of money before you run out of life. That's what you need to worry about as far as financially. But there are other pieces to that, right? If you're going to live a long life, you can't wind up being sedentary and sitting on the couch all day and doing nothing and not talking to anybody. You have got to make sure you stay active. You've got to stay engaged. You've got to make sure you're still connecting, whether it's church groups or fraternal organizations or whatever it is that you do. Make sure that you stay connected. Just because you retired does not mean it's time to lay around all the time. That is not going to make sure you've got a good longevity. That's going to actually torpedo it before it even gets going. So financially, we got to make sure you're prepared. We got to make sure you're prepared physically, and the physical and the spiritual also go together because just like that, you got to make sure that you stay connected, like I said, with your church group or with whatever you do spiritually. All three of those things go together to make sure you've got longevity. So make sure you get with someone like me and make a plan for your financial, and then make sure that you are going to stay active, stay focused, stay moving, doing things, and stay connected spiritually to make sure you've got the longevity that you're hoping that you'll have. So that's the first L. The second L is lifestyle. And this is huge. I see clients all the time that are actually underliving their retirement. Now, what do you mean, Tim? I mean, if you're taking less money out than you should be, or if you don't have a plan that's paying you as much as you could be making, you could very well be underliving your retirement because you're worried about what's going to happen. Well, if you know how much you've got, then you can have the lifestyle that you want, because retirement's all about lifestyle. All about lifestyle. And the way you get that lifestyle is through having guaranteed lifetime income. That's how you can enjoy spending that check that comes every month, because you know another one's coming next month. And if you spend that one, another one's coming the month after that. As long as you're breathing, those checks are coming. Helps you to have the lifestyle that you want in retirement. And if you're already in retirement, if you need to change that lifestyle, let's chat. If you're not in retirement, let's chat about what you want that lifestyle to be. Make a plan so then we can be prepared to put you into that lifestyle in retirement. So that's the second one. The third one, legacy. A lot of people, this is a huge one. They want to make sure they're leaving a legacy, whether it's kids, grandkids, a church, whatever, whoever it is. If you want to make sure you're leaving a legacy, absolutely the best way to do it is with life insurance. Because with life insurance, unless you're in really, really bad health already, for pennies on the dollar, you can buy coverage. So let's say you want to leave someone $100,000 when you're gone. Well, you can fund that for less than $100,000 right now, and then the rest of it you can use. And they're still getting $100,000 tax-free when you're gone. Those are the kind of conversations you need to have with someone. Figure out what you want your legacy to be moving forward and make sure you've got a plan for it. I know you're starting to sense, just like in all of my episodes, having a plan. Get a plan. What do you want your plan to be for legacy? And then the last L is liquidity. And that factors right in. Same thing. You need to have a plan. How much of your money do you need to be liquid? If you're getting enough income, then your liquidity needs actually need to be relatively small, only for big things, because you've got enough income. Again, a plan. Sit down with someone that is an independent, certified financial fiduciary that can help you make a plan and cover all four of these areas. So again, just to recap, longevity. Longevity is absolutely the biggest risk, and the thing that people don't think about is how long they're going to live. And unfortunately, why so many people wind up becoming a ward of the state at the end of their life, because they underestimated how long they were going to live. Make sure you got a plan for longevity, and make sure it's not just a financial plan. Make sure it's also a spiritual and a physical plan for longevity. Number 2, lifestyle. What do you want your lifestyle to be? Think about it. Talk to your partner about it. Make a plan for it. Let's get you that lifestyle that you want in retirement so that you can enjoy your golden years. Number 3 is legacy. That's the third L. Make sure you know what you want to happen when you're gone. We are not guaranteed tomorrow. We all know that. So what do you want to happen when you're gone? I know exactly what's going to happen when I'm gone. Do you know? Do you have things lined up? Do you have them the way that you want them? If not, get with an independent certified financial fiduciary and make sure that it does get set up like you want it. Lastly is liquidity. That one it's very important, but you need to make sure that you've got your plan solid before you really know what the liquidity needs will be. Because again, if you've got plenty of income, then the only liquidity you really need is for major emergencies, because you've got plenty of income to cover your expenses every single month. So having all 4 of these L's put together and creating a solid plan, that's the way to have a safe money retirement. Well, I must take a short break. This is Tim Wood, and you're listening to the Safe Money Retirement Show. Let's pause for some exciting announcements.
We all know that friend who's retired and still has to work. The one we've said we won't end up like, working till we die. But are you sure you're prepared? Hi, it's Glenn Beck, and I want to introduce you to Tim Wood. He is the owner of Safe Money Retirement. He's a certified financial fiduciary, and he makes sure that his clients aren't going to be that guy. Tim can help you know you'll have enough guaranteed income to cover you and your spouse for as long as either of you live and protect your money from the next market crash while it grows. Tim's helped hundreds of families know that they have a plan they can count on. You know I don't just trust anyone. Do your own homework with Tim Wood. Go to safemoneyretirement.com/Beck or call Tim. See how Tim can help protect what you've worked so hard for all those years. A safe retirement. Go to safemoneyretirement.com/Beck or call Tim and protect your money from the next market crash while it grows.
Now back to more of the Safe Money Retirement Show with your host, Tim Wood.
Welcome back to the Safe Money Retirement Show. I'm Tim Wood, a Safe Money Retirement Specialist. In today's case file, we are going to look at a unique circumstance. This was Shane and Rebecca. Now, Shane and Rebecca came in and we, of course, did our normal thing where we sit down for a fact finder and try to figure out what their needs are. Well, unlike most of my clients, number one, they didn't have any need for any more income. They both were extremely high earners and they both were getting the maximum Social Security benefit. So they were already going to make six figures just from Social Security. So they didn't need that. We also looked at potential growth plans. Now, while we might do some of those in the future, to be honest, right now, he's happy in the market, even with all of the craziness and even with the possibility that, yes, there could be a massive collapse and you could lose a whole lot of it. He realizes that. Not that it's play money, but he kind of hinted that it have been sort of play money, quote unquote, not money he had to have. So we're not even really looking at that. They weren't really so much worried about a legacy plan because they have plenty of assets and a big house and cars and boats and all kinds of stuff. So when they go, their kids are going to be well taken care of. They don't necessarily need a life plan. But the one thing they did need was something for long-term care. Even with all of their assets and all of the planning they had done in other ways, they had never really made a plan for long-term care. Unfortunately, they were already getting close to retirement. They were already in their upper 60s. So getting them a traditional long-term care plan would have been incredibly expensive or even impossible. We didn't go down that route, so I can't tell you exactly, but it would have been a challenge. And if they could have gotten it, it would have been ridiculously expensive. So we looked at alternatives. What we wound up doing for them was brilliant, and it actually was a single premium life product that had a long-term care benefit built into it. So let me explain what I mean. And if anyone wants to talk about this further, of course we can, and I can go into depth and explain how it would work for your situation. But for them, in general, essentially, they took a lump sum. They put it into, this was after tax the way that we did it with them. It was after tax money, put it into a whole life insurance policy, a single premium whole life insurance policy that had a long-term care benefit built into it. Now, that long-term care benefit, you can get those as long as you don't have, it's what they call knockout questions in this industry. As long as you don't really have something major wrong with you, we can get you into one of those plans, in some cases with no medical checks at all. And if it is, it's going to be something very minor. So essentially, that's what we did for them. We got them into a long-term care plan that actually doubles the amount that they put into the plan. So if they don't ever use it, great, it goes as a life policy. If they do use it, they've got double the amount that they put in that they can now use for long-term care. And basically, because they're both relatively healthy, neither one of them got hit with either of any of those knockout questions. So they got an easy approval. That might be something that might work for you. Now, how does this relate to you? What can you get from this? The thing is, a lot of people don't plan for long-term care. And y'all have heard me say before, recent statistics show over 70%, over 70% of people are going to need long-term care at some point in their life. but yet very few have any long-term care coverage. So having some sort of a plan is what you need to do. Now, what does that plan need to be? I don't know. If you're younger or if you're in incredibly perfect health, maybe a long-term care plan might be a good thing. The negative with traditional long-term care plans is, in most of them, the rate keeps going up and up and up and up. I see it all the time, people that have had a long-term care plan for 15, 20, 30, 40 years, but the rate keeps going up on them every single year to the point where they can't afford it and they wind up dropping it. Well, now the insurance company's just got a big grin on their face because they just got all of those premiums and now they don't have to pay out anything. So traditional long-term care is the right fit in some cases. And I do traditional long-term care. If anybody wants to talk about that, let's talk about it. But in a lot of cases, it's not the right fit because people, when they're thinking about or looking at retirement plans, they really are kind of aged out getting those regular long-term care policies, again, because they keep getting more expensive or they might not even be able to get them. But there are things we can do. What we did for the couple I was just talking about, getting them into a life insurance product. Now, they had really good health. If they had been in poor health, we couldn't have gotten them into that product. Because they were in good health, we were able to get them into that life insurance-based product. So that is one option. And if you're in great health, that might be the perfect fit for you. But let's say you're not in really great health. Let's say you've had some cancer or you've got diabetes or whatever. There's something major that might kick you out of that life insurance that we were talking about. There are still long-term care benefits you can get in products that have no medical qualification at all. And I'm talking about fixed annuities. There are products out there that can pay you a guaranteed income. That income can double for a certain period of time as long as there's money left in the principal if you get in a long-term care situation. Well, that can help take care of your long-term care costs. There are also plans that allow for growth with no chance of losses that you have access to all of the funds if you ever get in a long-term care situation. Another long-term care benefit, and both of those have no medical pre-qualifications at all. So, what do you need to do? You need to make sure you got a plan. What is that plan going to be? You need to sit down with someone like me. You need to sit down with an independent, certified financial fiduciary and come up with a plan that's right for you, because long-term care could very well be in your future. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your income in retirement is guaranteed lifetime income and not if-come. Avoid any future market losses. Plan for the potential of long-term care, and make wise planning choices so you can have the retirement that you deserve. Call us now for your free copy of Tim's best-selling book, Safe Money Retirement, Your Game Plan for Success. Our toll-free number is 800-913-SAFE. That's 800-913-7233. Or log on to our site at safemoneyretirement.com for more information or to request your free book. Thanks for joining us. We'll see you online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Obviously, by contacting us now, you are only taking the first step toward protecting your retirement. No information presented today should be acted upon without meeting with a qualified licensed insurance professional. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Interest and other guarantees in annuity contracts are subject to the claims-paying ability of the insurance carrier that issued the contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.